Today is a stakeholders forum looking at the new framework the authority is introducing for real estate investment trusts. Now, this framework is effectively targeting the design of a collective investment scheme product to allow for investment in the real estate market. As it stands, Kenya has definitely a growing collective investment scheme sector, but the existing rules on CISs restrict their investment to 30% in real estate assets, which has meant that they're not really viable for full investment in real estate and to allow their unit holders to enjoy wider exposure to real estate products. So the real estate investment scheme, real estate investment trust framework is now designing effectively a collective investment scheme for 100% investment in real estate products.
As you've just mentioned, Paul, what is the objective of this development?
The objective of that is, I think, threefold. One, as the authority, we're trying to diversify the available products in the market. Two, we as the authority are one of the key agencies charged with helping to deliver the Vision 2030. And in order to do that, we need to ensure that we're able to support the collection of capital to go into real estate development and specifically housing development. As one of the key vision issues is the gap in housing within the market. So, and we're also looking to offer products that are attractive on the one hand to real estate, retail investors, and also other products that may be more viable for institutional investors.
Now let's take a look at the potential of the real estate investment trusts in Kenya. How will they shape the market in this country?
Now, in Kenya, what we're targeting to do is the design of a two-layer real estate investment trust framework. One for income REITs, which are the traditional REITs that exist all around the world. And now for the Kenyan market, given the vision objectives of increasing the real estate availability and specifically increasing the housing availability in the market, we have designed what's called a development REIT or a D-REIT. Now, this will be a product that instead of targeting already constructed and ready to produce income properties, it will actually be identifying land and doing all the stages of development and then ultimately either offloading, developing to sell, developing to rent, or any other type of arrangement.
Now, it was hoped by the start of this year that the REITs will have come into place. When do you expect it to happen?
We kicked off the most recent process for the design of these regulations in approximately October, November of last year. Now, the authority had actually issued an initial draft of rate regulations in mid-2009. But that was actually what triggered a lot of the market discussions, looking at really the scope to which we were addressing, one, not only the policy issues, but also the commercial viability of the structures being put in place. And that discussion is what now informed the latest consultancy project, which we're working on in conjunction with the Ministry of Finance and the World Bank through their financial and legal sector technical assistance program, where we brought in expert consultancy support from Australia, second largest rate market in the world, to really look at designing a more fit for purpose, shall we say, framework for application in Kenya.